Shalom, shalom, shalom. How you doing, people? Welcome back to the Set Apart Trader YouTube channel. This is Jamal, and I'm back with another market recap. Today, we're going to be talking about the NASDAQ trade long that we took this morning. And I want to go ahead and discuss a few things that I think that could help any new trader who is trading the ICT concepts be able to see how it works in real time. If this is your first time tuning into our YouTube channel, do me a favor, hit the like button, hit the subscribe button, and also hit that notification bell. That way, next time I go live or upload anything, you'll be notified. I try to upload at least once or twice a week. Going live is something that I'm putting on pause right now, but for the meantime, I'm going to be putting out a lot of value that's working for me in the marketplace. So if this is something that helps you, it resonates with you, go ahead and hit the subscribe bell and join the family. Also, if you want to join our Discord group, the link will be in the description below, and you could definitely keep in contact with our group. You can also be able to join our group. It's 100% free. It's just like-minded individuals, like-minded traders, people who are on a journey to be profitable, and it's something that I think a community of traders is something that's needed, because in this niche that we're in rather, it can be lonely at times, and I think that a group of traders that are learning or growing together individually, not giving out trade ideas or anything like that, but just a group of community that's working and encouraging each other to continue the journey. I think it would benefit you if you go ahead and hit that that link in the description and join the family. Now, with that being said, let's look at today's trade. I want you guys to be able to look at this chart right here, and we can see we have these Fibonacci levels here. We have 0, 1, 2, 3, and then below the 0 we have -1, -2. What is that, right? So specifically at 2 p.m. Eastern time to 8 p.m. Eastern time, we have a range that's forming, right? And this is considered the central bank dealer's range. Now, we use this range specifically to be able to anticipate where the high of the day or the low of the day could possibly be formed. Now, the only reason why we don't incorporate the central bank dealers range is if there is a news catalyst that's going to cause market to behave how it behaves when news are being involved, or if the central bank dealers range, me specifically, when I'm trading the NASDAQ market, if the central bank dealers range between 2 p.m. Eastern and 8 p.m. Eastern, if it's less than 70% or 70 points, if that range is less than 70 points, I'm going to incorporate the central bank dealers range. Now, if it's above 70 points, I'm going to not worry about the central bank dealers range, and I'm going to trade normally the way I normally trade. Now, the reason why I wanted to introduce this on this channel at this time is because this was something that was very important and key to my entry today in the NASDAQ market. So we can see that if we zoom in a little bit here, and we can see that this candle right here is the 2 p.m. candle. And this candle to the right is the 8 p.m. candle. Now, me personally, my preference, I use the bodies. So the highest body, which is this 8 o'clock candle, to the lowest body between that range is here, right? The lowest body here and the highest body here, right? So this right here is the central bank dealers range, right? And if we look at the Fibonacci, the 0 level and the 1 level identifies the high of that central bank dealers range and the low of that central bank dealers range, right? And we can see that we have 1 standard deviation and 2 standard deviation above the central bank dealers range, and vice versa, we have 1 standard deviation and 2 standard deviation below the central bank dealers range, right? If we look to the right of this chart, we can see that the low of today that came in at 10 o'clock on this time frame here, we can see that the low dug right into the 2nd standard deviation below this central bank dealers range. Is that a coincidence? This is something that I want you to do. Take this information, what I'm saying, with a grain of salt, and go back test. Like, you have to back test what you're seeing on the charts. Whatever videos you're watching that's working for others, You have to make it make sense for you. So you have to go and incorporate this into your studies, back testing, and see if it works. If it makes sense, use it. If it don't, throw it out the window. Simple as that, right? Not selling anything. I'm just kind of sharing what's working for me and trying to give as much value as I can on this journey. So let's move down. We're looking at the 1 hour time frame right now, and if we look at the 15-minute time frame, this is the chart that I'm normally keeping my eye on to kind of see what price is doing. I can create trade ideas based off of this chart, based off of this time frame here. So majority of the time I'm looking at the 15-minute time frame. Now, yesterday the market nicely shot up, right? Traded, and then during the Asian session we can see that a new high, all-time high, was formed during Asia, right? Price traded lower and then started consolidating throughout the London session, right? And then we're gonna drop down now to the 1 minute time frame because we're getting closer to the time where New York Stock Exchange Open is about to begin. So while that is happening, I'm seeing that we have this 930 candle that opens up. Price failed to trade lower, sweeping a sell side liquidity, because if I'm looking to go long, I want to see price manipulate and sweep a sell side liquidity in the form of an Asia low or a relative short-term low, and then give me some type of displacement to help me to be able to see, okay, look, we're looking to go long right now. That's what I was looking for. Or if I'm looking for shorts, vice versa, I want to see a manipulation of buy side liquidity getting swept, then a displacement lower, a fair value gap of some form, then be able to look for a retracement into that fair value gap for a short. Now, price failed to sweep Asia's low initially, and then it traded right back into the price zone where the New York Stock Exchange opened, and then we have our first push breaking below Asia's low at 942, right? Now, this is now giving me ideas like, hey, we're probably going to go long, but we have to be patient. Usually the market moves in threes, right? It'll push 3 times lower, then reverse and go long, or it'll push 3 times higher, then reverse and go short. So this is the first push below Asia, then price retraces back into this bearish fair value gap that you can see here, and we can see a second push, and this second push takes out this low right here, and then at this level here we have a bullish fair value gap that prints right here, right? We have this bullish fair value gap that prints here. Now I'm thinking, okay, we're probably gonna go long, but on the retest, when price came back inside this fair value gap, we can see that this body fully closed below, and I didn't like that. When a fair value gap appears, I want to see that fair value gap left open. I don't want to see as soon as the fair value gap is formed, then price comes right back and closes it right back in. That's telling me that we are not ready to go long at this time. So after the first push and then the second push, my idea for longs was forming, but I didn't take that trade at this point. And I waited, and we can see that price revisited this level here, and then we got a final push to this low here. Now, the great thing about this here, and this is why my antennas was going off, like, okay, we're probably gonna go long from this level, because we have now dug into the second standard deviation price level away from the central bank dealers range. And as I mentioned, that's usually where we'll have the low of the day or the high of the day form. So now I'm thinking, okay, we're probably going to form the low of the day at this level here. So now when this price also printed, we can see also that we have a bearish fair value gap that was formed right here. Now, how can I use bearish fair value gaps in a market condition that I'm looking to go long? If this bearish fair value gap gets engulfed, now I'm treating it as a support level. I'm treating it as a bullish fair value gap. And that's what we can see here. Price fully engulfed it here. Entry was taken right here as price was closing, as price closed right here. And we can see that on this return, this is now, I'm looking for now confirmation to stay in this trade, right? I'm thinking that we are at the low of the day. We just engulfed this fair value gap right here. Another is that we are below the midnight opening price, which is this price level here. And from Asia's high to Asia's low, we are under Asia's low. So we are trading at a discount level. That's another key factor for me to feel confident that I'm going long. So now, after the entry, we see another bullish fair value gap gets printed here. So if I look at my if I use my Fibonacci tool from the low to this high here, before price started retracing, we can see that price retraced inside the 62 and near the 75% optimal trade entry zone. So now I'm feeling beyond confident because now this setup has met my A plus criteria. So now I just, as price pushed higher, I'm moving my stop loss to break even, and then the process is just to let the market work for you. At this time, the market traded up higher here, and I was able to close off my trades at this level here when I saw this bearish candle being printed. And also because if we look to the left, we have relative equal highs that was formed here, here, and at these price levels here. So that was the trade of the day. But I think that being able to manage the trade and be able to get in and get out with the win is the best thing for any traders. You want to be able to implement your plan, trade with your plan, and never go for home runs. The home runs, they're going to show up and it's going to be effortless. But when you try to force it, when I try to force home runs, that's usually when I start to make the bad decisions. But with that being said, that's today's recap. I hope you guys enjoyed it. Hope you guys learned from it. Hope you gained value from it. With that being said, salute and shalom to you and your household.